No matter how your investments are doing, the biggest fear for many facing or in retirement is the possibility of outliving your savings. To make sure retirees have enough money, some financial advisors have relied on a rule that says that their nest egg should last a lifetime as long as they withdraw no more than 4% a year. But now some say the old 4% rule could put your retirement at risk. Sharon Epperson has more.
It may seem like a fairly safe bet. Withdraw no more than 4% from your retirement savings each year, and you'll have enough money to last the rest of your life. Well, not so fast.
You know, I don't think the 4% rule is as feasible today as it was in the past. And the reason for that is because the market returns haven't been as consistent as we've seen in the past.
The 4% rule was calculated back in the 1990s, based on a portfolio with a mix of 60% large cap stocks and 40% intermediate-term government bonds. But times have changed. With historically low bond yields and a volatile stock market, the 4% rule may no longer be as safe. Getting a handle on cash flow in retirement is more important than any rule, many financial advisors say. Knowing what you'll be spending is the best way to determine what you'll need to withdraw. But financial advisor Doug Lockwood says it is possible for retirees to take out 4% a year from savings and have the money last, as long as the mix of assets is well diversified.
You have to look at not only interest rates and bond rates that you can draw upon, but where am I getting my income from my equities? And at that point, you have to look at dividend-paying stocks to grab that equity yield.
Depending on your age and risk tolerance, Lockwood says a 4% withdrawal rate is a good guideline for gauging whether you'll have enough money in retirement. But also consider taxes and inflation.
With inflation and taxes, that investor who wants to draw 4% has to be able to make at least 7% on average to be able to net, get that 4% in their pocket. Well, that can be challenging at times. And I find that a lot of folks are just not invested appropriately to be able to address that type of need.
Many pre-retirees also simply need to save more, Lockwood says. In the end, how much money you put in may be the biggest factor in determining how much you can take out. For Nightly Business Report, I'm Sharon Epperson.